Hey everybody, this is Glenn Tompkins from VectorVest. This just in and what it means for you. So let's address the elephant in the room. You'll see a lot of videos on YouTube about what's going on with GME and AMC. So what we're going to do today, we're going to look at what's going on, and a lot of people who are holding the stock, we're going to talk about them. And for those of you who are interested in wondering if you should even jump on board with what's going on, well, we're going to talk about you as well. So if this is interesting to you, you sit right there. Hello everybody, my name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's always my pleasure to bring these videos out for you. Before we get started, if you're not a subscriber to the channel, I'll invite you right now to hit the subscribe button, become a subscriber to the channel, invite your friends to come to see what we're doing here at VectorVest in regards to stocks that are making their way in the market. If you haven't already, share this video out to everybody you can, and most of all, if you like the content, don't forget to smash that like button. All right, let's get hot and heavy into this. So everybody knows that there's a group of people, Reddit, Wall Street Beats, who are in a process of a movement to move both GME and AMC, GameStop and AMC theaters, to the moon. You've got your terminology like diamond hands, people who are going to hold on no matter what, because they're going to teach the hedge funds a lesson. This is something that's called a short squeeze. Short squeeze is when a stock gets pushed down, short interest on a stock gets pushed down, or a stock gets pushed down because hedge funds bet that they can go and push that company down, and possibly out of business. And Wall Street Bets or Reddit said, no, we're not going to let that happen. We're not going to take it. We're not going to take it anymore. And they got a group of people together, and you get the horde of people running up to try to push the stock's price up and buy into the stock to keep it from going down. Then the hedge funds who were shorting the stock had to cover, and they had to cover at a higher price, and a couple of them got beat to heck. They really did. So it's the retail investor against the hedge funds, and we're going to look at who's going to win. Possibly, we will never know until it happens, but the small guy, the retail investor, is trying to get their money. They're trying to make some money, and it looks like the hedge funds are trying to stop them by employing some tactics to keep the price from going to the proverbial moon and hurting the diamond hands who are holding the stock long term to move the stock's price higher. So now, one thing you'll always know about me when I do these videos, I am not going to tell you what you want to hear, but I will tell you what you need to hear. So I've got some stories behind the move. Let's go take a look at those. All right, first one, GME stock price rise is enticing but misleading. And this story was done in Forbes back on February 27th of 2021. Don't get trapped. So this is not a good story for saying, hey, let's go blast this stock to the moon. But GameStop's 150% stock price rise last week is a gotcha. Now remember, this was done on February 27th. GameStop lacks the fundamental support to break through the 150 upside barrier in earnest. So you know what I'm not going to do in this video? I am not going to talk about the fundamentals because this movement transcends just the fundamentals. It's all about what the retail investor can do to stick it to the man. And that's the movement behind anything else, all right? Why? Because without fundamental support, the action is totally dependent on day traders watching one another's actions while examining the latest stock chart picture. And that's where the 150 share price barrier gets strength. So we're going to talk about that. The story goes on, but GameStop was a standout in the stock market weakness, while the stock's sudden strength in a dull stock market can be a positive sign. GameStop is in a different camp, having sold off significantly while the market was climbing. That means its reversal last week is simply a continuation of its negatively correlated pattern. All right, so that's all I'm going to read in regards to the story, into that story. Let's go look at another story on GME. Redditors Ryan Cohen needs your help to send GME stock price back to $500. So it talks about Radio Shack, how Radio Shack was shorted and finally went out of business. But today, GameStop, the stock sits in a similar junction. Since the early 2010s, GME top brass had treated their retailers like drunks at an open bar, doling out a princely dividend to shareholders and stock options to themselves while cutting reinvestment into aging stores. So a lot of people out there will tell you that they like the stock, but look at what was going on with the stock prior to the movement, all right? And maybe why the stock was shorted in the first place, because maybe the market or the hedge fund saw the writing on the wall. Now, don't get me wrong. I've got no skin in the game. I'm not bolstering the price. I'm not trying to. I have got nothing to do with either one of these stocks that I'm talking about. So before that even comes out, I'm not pushing in either direction. Remember, I'm just telling you what you need to know to make your own decisions. The love for GameStop and disdain for Wall Street is an unusual combo. It means that unlike Radio Shack in 2015, the video game retailer still has a fighting chance. For the good of GameStop and its shareholders, Reddit investors need to finish the revolution they started. Do they still have the wherewithal to finish this revolution? And if they do, Redditors and Chewy, the founder, Chewy's founder, can still send GME back to $500. Now, the article talks about some other things that are needed in order to make that happen. All right, so that's enough on GME. Let's talk about AMC. The bears are wrong. AMC stands to benefit from the reopening of America. Now, AMC, I am more on board on, or on board with. I recently went to a movie theater with my wife. We saw a movie. There were only two couples in the whole theater, us and another couple. The seats, though, were revamped. They were really wide. They reclined, the whole 9 yards. So I think AMC is really looking for a reopening of America in order to benefit. So I think I'm more on board with AMC than I am with GME. Personally. And I think that as New York opens up and Los Angeles opens up and these theaters open up, they have a better chance on moving higher than the GME does. The story about GME is just talking about how they used and abused all of their money to pay themselves, and they didn't put the money back into upgrading the stores. But they are looking to move to be a little bit more technologically advanced than just looking at videos or games on discs. So I like that as far as GME is concerned. I just don't know if they got the wherewithal to keep moving higher, but we're going to take a look at that. All right. The next story I have on AMC, AMC approves millions in bonuses to top execs. So they're doing the same thing. They're trying to hold on to people and say, come on, folks, we can make it through this. We want to keep you on, and we're going to wade through all of this, and we're going to get through. And I think that AMC does stand a better chance. All right, so now let's take this a step further. Let's go look at the stocks that I have in my watch list. Here's the two. Remember, I'm not going to analyze these stocks from a fundamental standpoint because it goes well beyond that. As I look at the prices today, GME is up 15%, AMC is up 12%, trading at $117 and $8 or $9 respectively. What I do want to look at, remember, I'm not analyzing it, but I'm going to look at the graphs of these two stocks. And I'm going to put some highlights in here. Here's GameStop. This was the first move. The stock's price went all the way up to $483, and then it came back down. All the diamond hands said, hey, buy more stock because we can push it to the moon. A lot of people got caught up in here. They said, you know something, I ain't got diamond hands. I got paper hands. And a lot of that interest went away because I'm looking at the volume along with a 50-day moving average of volume. It sat. Then we got a resurgence. Boom. I have a 20-day exponential moving average. Was that a good opportunity to get in? Absolutely. Look at this barrier. That article talked about a $150 barrier. Look at that barrier. Hit, 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 even though it broke through and traded, broke through, came back down. That is a barrier that GameStop has to be able to get through. Not only that, open candle today, the volume is below the average volume. Are people getting tired of this at this point in time? Now, your diamond hands are going to be holding it and go, we're going to take this to the moon. Where is the moon? Think about that. Where is the moon? Can it break through that barrier that it was at before? It's going to take a lot of retail investors to do that, and I don't know if that's available right now. A lot of people talking about it. Is it going to have the opportunity to go up? Let this get past this 150 barrier and stay above that before you think about jumping on board if you're not in it already. Let's go look at AMC. AMC, I like the move on AMC most recently. It's got a $10 barrier, not able to break through that. Hit, broke through, came back down, approaching it as well. Its candle is not nearly as big as the GME candle today. We're good at over the last couple of trading days below the average volume. Not as much people jumping on board with it. So where does that leave us? All right, let's talk about that. Where does that leave us? If you're in the stock and you're holding it because you think that you can push it higher, by all means, go have at it. Go have at it. All right? And I hope that you're able as a retail investor to make that money. I, on the other hand, I'm a retail investor as well. And I'm not playing this game because I invest in stocks. This is a movement that's driven by emotion. And if you're okay with that and you understand that and you still want to take advantage of it, have it. The stock is moving over the last couple of days. Smaller candle on AMC than it was for GME, but there's no, you can't fight the tape. The stock is moving higher, all right? And there's a drive behind it. Is the drive still have the gas to keep going? Is the revolution that's being televised, literally, the revolution is being televised because it's out there on social media. Is it enough? Are the Reddit Wall Street bet people, are they able to push it up higher? When I look at the waning average volume or the waning volume below its average volume, I don't know. But if you can make it happen, make that money and all that stuff. So don't forget, again, if you like the content, subscribe to the channel, hit the like button. I want to hear what you got to say about it. All right, but I needed to put it out there for transparency reasons. I'm not in this game. I'm not playing it. I don't own the stock. I don't endorse the stock, either one of them. But I want you to make your own decisions. But let me know in the comments what you think about it. So until the next time, folks, see ya.